Oh, I'm already on. Hey, welcome. Today is Monday. Welcome to today's Tax Talk. I am your host. I'm attorney Stephen Leahy. Today is Monday, January 3rd, 2022. That's right, 2022. And that's what we're going to talk about today. We're going to talk about tax planning and things that you should know early in the year to prepare for next year. That's what we're going to talk about. Won't you join us? Okay, welcome to the show. I'm your host. I'm attorney Stephen Lee. I'm looking for some picture that I have to welcome everybody into 2022. We're a little off kilter today. It's a new year, new time. It's going to be fine. Thanks so much again. Happy New Year to you and to your family. And thanks so much for joining us here. It is 2022 for tax planning. That's what we do here at Open Tax Advocates. We help people fight the IRS. We help them with tax planning, business structure, things like that. And that's part of the tax planning. A lot of my clients come to see me after there's a problem. And ideally, right, we want to do things before there's a problem. And sometimes that means structuring your business correctly, and so you don't have you pay the least amount of taxes. Sometimes that means planning in advance so you can get the most benefit from the tax laws. You can't benefit from them if you don't know what they are, and that's why tax planning can be so important. We're going to go through an article today about tax planning. Talk about retroactive tax laws and sometimes what happens. We're going to talk a little bit about that, and we'll see how that goes. But first I wanted to talk about this article. So let's go to the article. And there's my 2000. Well, Happy New Year again. Okay. And this is an article for Forbes. Want to make 2022 financial resolution? Don't overlook these tax tips. And I think they were good tax tips, so I'm going to go through them a little bit. I'm going to add to some. As 2022 begins, tax practitioners everywhere are looking to the upcoming tax season. Begins, I think, end of January often. To this year again, Emancipation Day is on Friday. Actually, I think it's 16th. The 16th is a Saturday. April 15th is a Friday. But because Emancipation Day is on a Saturday, they celebrated the closest weekday, which would be Friday, and that would make the next year's tax returns due on the 18th. The 18th of April. And so again, the tax season doesn't begin until the end of January. Last year, I think it started at the beginning of February. Since the beginning of the pandemic, the tax industry has not just been preparing tax returns. Rather, they have been administering numerous plans for helping clients obtain PPP, to reconciling stimulus payments, to dealing with an increase in state audits. On top of that, the IRS doesn't seem to pick up on the phone and hasn't processed as many all as mail. It would be comical if it weren't true. Absolutely true, but it's not comical because it is true. Yet taxes stop for no one. As we begin to look at the 2022 filing season, tax practitioners have some wise advice for taxpayers looking to take control of their tax lives in the new year. The interesting thing is that many center around three unique tax concepts: timing, security, and organization. And that's why I wanted to review this article with you, because I think it all are pretty good. That might seem odd to many. After all, isn't tax about numbers? Sure, it is a lot of the time, but at the end of the day, a tax return is reporting your financial life to the government. Making sure process is thought through is really important in order to have a clear picture of your finances. Trust us, we'd rather take a little bit more time now to make sure that your return is correct than have to figure out how to communicate with the IRS about it later if it's wrong, explains an EA. An EA is what they call an enrolled agent. Here, if you're an EA, you don't have to be a CPA. So I don't know why. Maybe he works for a CPA, but here is some of the best advice out there in managing your tax returns. The timing basics. When it comes to timing, preparing your tax data is an important part of the process. Start on tax preparation early. Again, this is great advice, but so few people take it. 2021 had so many new tax implications like the additional child tax credit, stimulus payments, pandemic unemployment assistance, and PPP forgiveness. That's a lot of extra paperwork beyond the typical W-2 and 1099s that most taxpayers receive annually. By organizing the materials in a timely fashion, it gives you a chance to discuss how your financial life might have changed. If you have any changes in the current year with your income compared to prior years, reach out to your tax preparer and let them know about it. Well, they'll find out about it. The proactive step inter-year can prepare you for a big tax bill you weren't expecting and can sometimes help lessen it with tax planning strategies. Now, how you start a tax planning strategy has to do with having someone that you can trust right up front, because these questions come up during the year. And if you don't have someone you can call during the year and say, what about this? What about that? By the time you have the question at the end of the year, it's too late. It's already over. Now you can talk about, well, let's do next year. Most tax preparers don't even talk about tax planning or what you can do. What they do is they prepare your taxes. A good outfit that helps you will review where you were, where you want to be, and what you can do to lower your tax burden. So, for instance, in my office, one of the first things we do is look at your business structure, because most of my clients are small business people. So, take a look at your business structure. Do you have the proper structure for your business? Are you incorporated? Have you elected for the subchapter S? Have you set up separate bank accounts? These types of things that can really help you lower your tax burden. Are you on payroll? These types of things. And these are the things that we help our clients do. And these are the types of things you should be worried about and that you should consider. And again, that's why it helps to have somebody on your team all year long, that when you have a legal or a financial or accounting question, you can call them and know that you're going to get a good answer and that they'll hear your question, because so many don't. Some of these outfits, they're seasonal, right? You try to call them in July, you don't really get an answer because nobody's in the office. That doesn't really help you. Okay, so let's go on with the. Now, this is another important area. Security has become a huge issue in the world of tax professionals. Your tax professional often is on the front line in helping you handle identity theft. Being proactive is important. Please don't share your tax documents through the email. This is important. Security with your tax firm is so important. Do they have a proper security set up electronically? Everything's electronic. Everything's online. So do they have the proper setup? Are they sending you protected tax records? As this points out, do not send tax records over the internet without being protected. You can use things like Dropbox or these DocuSign or these other we send out things that are password protected, these PDFs, so nobody can get in them if they sent to the wrong person, or if somebody gets into your email, they can't access your tax information because everything's right there, right? That's the most important. So you got to be careful with that. I don't know what that was. Why is it this a big no? Security risks abound. If someone can get hold of your social security number and your W-2 and other key documents, you are at risk of identity theft. And for better or for worse, most tax documents have this important data on it. The safest option is to download the forms from financial institutions and then upload them to your tax professional's portal. And if your tax professional doesn't offer these types of secure services, it might be time to rethink about the relationship, as tax professionals need to be storing your data in a secure way. Absolutely true. One of the most common mistakes taxpayers make is that they don't set aside key tax materials that arrive in the mail or over the email. My one piece of advice is to not throw away any important tax documents. That's very good advice. Or anything that looks important that you receive from the IRS. Too many people throw everything that they get, or they don't open it. You get something from the IRS, open it. Put it in a folder and give it to a tax professional. This year, there may be new forms that will be received. Taxpayers should look out for IRS letter 6419, which will help them reconcile the child tax credits they've received and what they're entitled to. Taxpayers will need to compare what they've received to the amount they're eligible for when they file their 2021 tax return. That's going to be a big one for a lot of people. Ultimately, being on the lookout can help save money. Without the letter, you'll need to pull transcripts, which may cost you money and delay in time refund if you have math errors. Organize your numbers. Tax professionals can dread working with self-employed individuals who show up with a shoebox of receipts. It's the worst way to prepare a return. Actually, this isn't preparing a return. That's called bookkeeping, right? So you need bookkeeping along with tax preparation. And if you show up at an office with a shoebox full of documents, look for a big bill, because they're going to send it to somebody for bookkeeping and they're going to charge you a lot of money. And that's usually because that takes the most time. It's very time intensive, and they still need your help. So you're better off to do it yourself, or to get a bookkeeper throughout the year so you can do it on an as-you-go basis. Makes sense, doesn't it? To prepare an accurate tax return, it depends on your bookkeeping. If your bookkeeping is a mess, your tax return will be incorrect. Yet many self-employed individuals and small businesses don't focus on organizing their numbers. As a result, deductions are missed and tax planning is impossible. The good news is that a lot of programs out there can help you with the bookkeeping, but there are some cautions. If you're doing bookkeeping yourself, make sure to get it reviewed. Make sure your books are in order and reconciled through December 31st if you are using an accounting system to track your income and expenses. The best process is important. The best way to set yourself up for success in 2022 is managing your tax return is to focus on timing, security, and organization. By being engaged with the process, you enable your tax preparer to provide you with an accurate return and the best tax planning advice for your situation. Absolutely true. So that's why I wanted to go over that article with you, because that's absolutely true. I had another article about new tax laws. Can they be retroactive? And there's and because here's what's going on. The Biden Build Back Better bill is still pending out there, right? They haven't given up on it. And if they pass that bill, much of the changes are going to be retroactive. And so today we could start doing your tax return, and then tomorrow find out that the tax laws changed, and then you have to do it all over again, according to the new rules. And I would really prepare people for this. That it's going to, if they pass that bill, it's going to be a lot of retroactive tax changes, tax rates, things that are taxable, things that aren't, things that are deductible, things that aren't. The SALT, which is the state and local taxes, the limitation's supposed to change. Will that change if retroactively? Well, I think if they pass the Biden Build Back Better plan or bill, it will. And so you have to be very careful. And I was going to go through this Supreme Court case, but I'm not going to do that. There was a Supreme Court case years ago, and they found, yes, it's totally constitutional for the Congress to change laws retroactively. It makes tax planning impossible. Right? How can I plan for something that's not even on a law yet? And that's what's going to happen. So that's another reason that we should all oppose the Biden Build Back Better bill. It's got all of these changes in it. and they're not good changes. They're going to be raising your taxes. So let's object. Let's not let that bill happen. Just my opinion, and I wanted to share that with you. So thanks so much. This is the first today's tax talk of the year. I appreciate you taking the time to see it. It's a kind of a short one because it's short. Tax planning, though, is important. And if you're looking for tax planning, then you need to give us a call at 312-664-6649. Actually, I had my New Year resolution was to start talking about subscribing and liking at the beginning of the video, not at the end of the video. And so I'll try to do that tomorrow. Tomorrow, remember, is Crypto Tuesday. So we're going to talk about cryptocurrency. We sometimes talk about blockchain and the other technologies that are associated with blockchain, because I think that's really what's going to be changing the world. Remember, if you're fighting the IRS, fight them with my book. The first thing you got to do, if you're facing a tax problem, get a copy of my book, Deal with Your IRS Problem Today. Go to freeirsbook.com, freeirsbook.com. Again, thanks so much for joining us here today, and we'll see you again. And we will see you again tomorrow for Crypto Tuesday. Thank you.